Hey everyone, I'm making a really important video today about the euro, as we've the NFP release coming up this week. If you've been keeping up with my euro analysis series, this video will be easier for you to understand. And if you haven't been following along, don't worry. I'll cover almost all the key points to deliver the analysis in a way that all ICT concept students can understand. Last week's conclusion was that I'm looking for bullish entries if the price reaches the daily swing low first, and I'm looking for bearish entries if the price reaches the 4-hour bearish fair value gap first. In both conditions, I mentioned that I will target an internal range opposing PD array, as I'm expecting the consolidation to continue. However, by Monday's close, the price formed a new swing low. Then on Tuesday, the price touched the bullish rejection block and traded higher. Conditions like this are when SMT, also known as the smart money technique concept, unfolds. Even though there was a small scalp off of the bearish 4-hour fair value gap mentioned earlier, it's safe to say that it was a bullish week. With that in mind, let's start the top-down analysis, because it's not just a new week we're heading into, it's also a new month. By the way, hit the subscribe button if you want to stay updated with these videos, which may help you navigate the market better. Without further ado, let's move to the monthly chart. See you after the disclaimer. Looking at the monthly chart, we notice that the price is trading at the fair value gap level and has taken a swing low. We also have a swing low and a fair value gap, but these are outside the current range we're in right now. There are not many things to see here on the weekly chart other than this bullish order block that the market is currently respecting, and that we're in the discount half of the weekly range, which has been mentioned multiple times in previous videos. On the daily chart, after the price broke bearishly off the consolidation range and came down to this fair value gap, there was a bullish response off of it. I want you to pay attention to this chart, as it plays a crucial part in this top-down analysis. After the price broke down bearishly, a lot of traders will start to seek continuation trades. But here on this channel, I keep reminding you that it's dangerous to look for bearish trades in the discount half of the weekly range. And as well, the price respected the discount arrays. Looking at the nearest fraction of the daily chart, we can see that this fair value gap has not been repriced yet. We can see here that the market is not letting us have it easy, with a weekly discount range and a near bearish daily fair value gap. But let me tell you, in this mess, and without dropping to the 4-hour chart, I almost have my bias for the next week. I guess all these years of studying are paying off after all. Dropping to the 4-hour chart, and to not waste your time, I added the PD arrays from the monthly, weekly, and daily down to the 4-hour. So, what is my bias for the upcoming week? Before we get into this, a quick reminder of ICT rules about trading on NFP week, which is to stay away from the markets after Wednesday's New York open time. So, if you want to keep the progress of your demo account, it's advisable to adhere to this rule. After going through all this information, I can conclude that on the higher time frames, I'm bullish. However, I'm not discarding the idea that the price may give us lower prices and take this low, especially with the presence of the bearish daily fair value gap mentioned earlier. In terms of the price action for the upcoming week, if the price produces a bullish price action by going down to the discount arrays first during Monday, Tuesday, or Wednesday, I'll look for bullish trades, targeting any internal opposing PD array. Other than that, it's either a displacement that sets the start of a new trend for the weeks afterward, or a muddy price action that confirms the continuation of the large range consolidation phase. That wraps up today's video. I hope you find it helpful for your studies. Till next time, stay safe.